Hello, welcome everyone. What we're going to do is a bit of a mixture. As you can see, I've got a gentleman sat in front of me that perhaps some of you have already met. We've had a stamp duty change looming on us, and everyone has been discussing what's going to go on. Well, it's about to happen. So we've brought in an accountant who is going to run through potential implications, how it affects you, and what sort of changes potentially to make to your business, or really knowledges to have in your conversation. So to start off with, short sort of marketplace update, and it is a relatively short one at the moment because we're at a point whereby almost everyone is spending 99% of their time talking about the changes that are about to happen rather than negotiating deals. But I suppose at the moment, yeah, a lot of people sat on their hands, thinking about deals, looking at opportunities, asking how it's going to affect them rather than negotiating. So where does that leave us as investors? Probably at the moment, some of you will be very frustrated with transactions that you can't get to move forwards. The reason you probably can't get them to move forwards is because the vendor is trying to work out what to do. So don't panic. And I think one definite tip for the moment is don't be increasing your offer time and time again just to get the vendor to agree. Sit there, wait till the start of April, and then you'll find that the deals will unlock themselves. So it's definitely a time where I don't think a lot of people are making decisions. So for yourselves, don't get frustrated. Keep your offers in place. Imagine that you're building that pipeline we've talked about of deals there in the offing. When it comes into April and when the changes have happened, it does look like there is going to be a large change in stamp duty and there is going to be an increase in stamp duty. That increase is purely a cost of transactions. By no means is our property marketplace going to change. By no means are tenants going to stop living in properties. None of those changes are going to happen. All that's going to happen is we need to change the way we calculate our deals. The way we run our numbers, we put a different analysis in there. That's the only thing that's going to change. Remember, the absolute foundation to investing in the UK is we have more people than houses. It's a supply and demand situation. There are not enough houses for first-time buyers, second-time buyers, and there's not enough properties for tenants to live in. So that's the foundation. It's just our cash flow analysis that changes. And the reality is our offers are going to change as to how we present our offers moving on forward. So that's a little bit of a marketplace update. So I would say it's kind of like preparing before battle almost. Prepare yourself and be ready for the start of April. Be ready for some sellers that are out there that are making their decisions. They know where to go. And I tell you what, there's going to be a few disappointed people out there as well. A few sellers that are keen to get their building sold because they have missed the deadline of selling before April. So please do prepare yourself for opportunities to start coming along. Don't panic with your offers at the moment. Don't be increasing your offers too much because you're only selling yourself short as you're running forward. But you'll notice I've got sat next to me, and those of you that will have already met, I've got a gentleman called Brian Mason. Brian is an accountant, and you can see he's the professional that goes into the office. He's done the exams to learn about accountancy, whereas I spend my time in buildings because he looks a lot smarter than me. So I'm going to hand over to Brian to introduce himself formally and actually to talk about the stamp duty changes that are about to happen and the implications they have on your property business as we go on through. I may well jump in and interrupt him perhaps as saying some points from the Investors Directive, but really, this is a person who you should be listening to because the accountancy side is the side that advises you on the profitability of your business. So without further ado, I'm going to shut up and hand over to Brian.
Thank you very much, Harry. So I'm Brian Mason. So I run a accountancy practice in Hampton in southwest London, and we have a number of property clients. And as Harry said, some of you may even have met me before. So from the 1st of April, we've got some new stamp duty rules that are coming in the UK, and they're really going to hit investors on the cost of the deals that they're doing. And essentially what's happened is there's a 3% premium being passed on to the stamp duty charge that you would normally pay for all purchases of property above £40,000. This applies only to residential property purchases, so it doesn't apply to commercial property, and it doesn't apply to what we call mixed-use property as well, and that's a property where there might be a linkage between some residential and a commercial element. Classic would be something like a doctor's surgery or a shop with a flat above. So those types of properties are still in the commercial rates, which are far cheaper than the residential rates.
So Brian, what you're saying there is there's a difference between a residential property and a commercial property.
Absolutely.
So probably from my perspective as an investor, I want to be trying to call my buildings commercial. They obviously have to be legally,
Indeed.
As we run on forward. So the commercial property, I believe, or according to my solicitor, is a commercial property is a commercial one, so an office building or a shop building,
Indeed.
or even mixed use where we've got commercial on the bottom.
Mm-hmm.
Also, I think it qualifies, or it does qualify, as a block of flats that has 6 or more flats in it, counts as a commercial building. So for those of you that are out there purchasing blocks of flats, not HMOs, it has to be a block of self-contained flats. If your property has 6 or more flats in it, make sure you inform your solicitor of that, because that counts as a commercial property. And so that's quite an important thing. You don't want to forget that element to it. So the major change, Brian, has happened in the residential marketplace, not the commercial marketplace.
Absolutely,
yes?
absolutely,
Yep,
Harry.
yep.
Yes, indeed. The rates for commercial stamp duty have actually dropped a little in the recent budget that we had. So actually, it's making commercial property a slightly more attractive in terms of stamp duty as a standalone. We should just explore some of the exemptions that are available surrounding the new charge for stamp duty. If you buy a property just to live in, then these new rates don't apply. It only applies if you end up with a second property at midnight on the day of a deal. Also, just to explain some of the important points around who has to pay this extra charge, if you're doing a joint purchase with another third party, if they already own residential property, then you may have to pay a 3% premium on the whole of the transaction you're involved in if you're buying jointly with them, because they own another property, even if you don't. Because it only matters on one owner owning more than one residential property. Now, these always apply to companies from their first purchase of residential property. There is no one property exemption that's only available for individuals. But do check if you are buying jointly whether the other person has another property already, because it may well impact upon the stamp duty charge that you're going to pay.
So if I can just jump in there, from sort of my perspective as an investor, it's the second property that does that increase.
Absolutely.
Is there a sort of a fixed way that the government finds out you've got a second property, or is it your declaration as to whether on completion day? Is it your declaration that you say it's your first?
It's a good point you raise, and the way it's being policed is, yes, it is a personal declaration, and that will be made to your solicitor as part of the conveyance process. The solicitor will complete what's called a stamp duty land tax return. You probably, as the buyer, never see one. The solicitor signs it and prepares it all for you. But one of the new questions on there is, does this person own another property at midnight on the day of this transaction? So it's kind of being done on trust, but the government will know who's buying each property, because you have to put a tax reference on your stamp duty land tax return. So don't think you can just avoid it by not putting your tax reference on there. They will come and they will catch up with you eventually and charge you that extra amount of money.
So that's a key factor to think of, isn't it? On completion day, your bill will be smaller.
Correct.
Because you've signed the declaration, it's taken on trust. But stamp duty is a retrospective thing. So if you've sort of forced your bill to be smaller on completion day, what may well happen is a bailiff comes and knocks on your door from HMRC and says, here's a bill, please pay it within a time period.
Absolutely.
And that can happen any day in the future now, can't it?
It certainly can, and there would also be some interest and penalties, one would imagine, when that bailiff turns up.
And the person not to upset in the country is the taxman. They're
Correct.
surprisingly powerful people.
Indeed.
Okay. So first thing is, it's the second property. And then also you mentioned buying jointly. So if I'm investing with my friend, let's say, and my friend, perhaps he's giving me some of the funding. We're partnering up to invest.
Sure.
It's my however many property, but over one, and it's his first property.
Indeed.
In that situation, if he bought the property his first one, he would pay the lower stamp duty. Me bringing my name into that transaction triggers the further stamp duty.
You're absolutely right.
So potentially in a relationship like that, where you've got two people investing in individual names, you want to think about who the buyer is.
Correct.
On paper.
Absolutely. There could be some options there where, in your example, the friend who doesn't have another property is the person that actually buys the property, and then maybe you have a private arrangement about how you share out any profits arising from that particular property.
But the big worry for me there is he owns it, not me.
Well, that's absolutely true.
So
yes.
there might be a dispute on profits.
Indeed.
So that's that one. And then the third point, you covered many very important points there. The third point you mentioned is companies.
Yes.
A lot of investors, and the government seems to be sort of coercing us down the line of using companies more, both international investors and UK. If you're investing for a company, it's 3%. The extra 3% is all day long, is it?
That's right. So the 3% extra charge applies from a first residential property a company purchases. There is no one property exemption at all.
Okay.
And you're absolutely right. The government do seem to be trying to push any sort of business into a limited company, it seems to me, at the moment. Corporation tax rates on profits are reducing, and there was a further change in the recent budget that pushed the rate down from the 1st of April 2020 down to 17% on profits from the existing 20. So there is a real move there to push people towards companies, it seems. Okay. But that stamp duty does apply from the first property bought by a company.
Fine. So as you mentioned, this change, the extra 3% stamp duty, is happening on the 1st of April.
Absolutely, yes.
Okay. So, I mean, is that basically the change that's happening? We just need to budget. Are there any thresholds that it comes in? Is there a minimum amount or anything like that?
There are no thresholds at all. It's the 3% charge on top of the standard residential stamp duty charges that we all have or existed previously. The only threshold that exists is if you were to buy a property under £40,000, there is no stamp duty charge on that at all. But as soon as you get to exactly £40,000, then 3% starts to apply.
On the whole amount?
On the whole amount, yes.
Okay. So we've got the 3%, but then we've got 3%, it's actually 3% plus what used to be charged, isn't it?
Correct, yeah. Correct.
Okay, fine. And that's quite a long-winded way of explaining, isn't it?
It is.
So I suppose the main change that's happened is 3% increase, isn't it? Yep.
Absolutely.
Do you see any ways that might be changed in the future, or do you think as an investor we just accept that and we run our numbers differently?
My view is that I don't think it will be changed in the future. I think I can't see any mitigation coming in at all. So I think it is something that as investors needs to just become part of the numbers, and maybe it becomes a negotiating point when buying, that you can talk to the seller and maybe knock somewhere between 0 and 3% off of the price, so you end up in the same place anyway.
There's been a lot of conversations and different people with different thoughts about this sort of stamp duty change. All of those conversations with regard to loopholes, having 15 properties more, bulk buying, working your portfolio in a different way, were all a waste of our energy, and we've wasted our cups of coffee discussing it, really. Is that what's come out? It's just 3%
That's probably a fair comment. There are some very minor exemptions, but the way they're worded is they're very targeted. So actually, the government have been quite clever, I think, and there are no loopholes that me or any of my solicitor friends that I've talked to about this have been able to find yet.
Great.
So I think everyone should work on a straight 3%, assume it's fact, yeah.
Okay. One thing that actually you mentioned whilst you're here is changes in corporation tax.
Indeed,
so we've got a couple of drops coming on.
We have, yes.
What were those again? I've forgotten them.
So where we are at the moment, corporation tax at the moment, flat rate on company profits is 20%, and we know from the 1st of April 2017, the rate is dropping to profits after that date to 19%. And now from the 1st of April 2020, it's going to drop to 17%. That was previously going to be 18, so they've dropped it another percentage point. So I know 2020 seems quite a long way away, but it's a move in the right direction. So taxes are dropping. Some
of our negotiations take a very long time, so you never know. We might be looking at that as we're going on. So that's for UK limited companies, isn't
Absolutely,
it?
UK limited companies,
yes.
Indeed.
Okay. So, I mean, that's quite an interesting change. Certainly the stamp duty, I think it'll send a shock through the marketplace at the moment. But it's quite nice that actually it's clean and tidy, isn't it? Makes life easier for us to know where we stand.
Indeed, and I think you're right, it will send some shocks through the market for some people, but I think for more professional investors, I think they'll understand it and be able to cope with it. So I don't see long-term it making a huge amount of difference to the market as it stands, really.
Yeah. I think you probably mentioned exactly the right thing about sort of pricing it in and everything. From an investor's perspective, as many of you like myself, I've got a spreadsheet I use to analyse each deal. My stamp duty stamp duty figure increases that I have to put in there, and that's going to lead to a reduction in offer price, so I get to exactly the same place.
Sure.
As I'm sure many of your investor clients work, it's the calculator that actually makes the decision rather than the heart.
Well, it should be hard and fast numbers. Are always what I would say. I would say that I'm an accountant, but I think that's the way people should be working their businesses.
Well, you wouldn't be very emotional about many of the buildings I buy anyway. So that's the stamp duty change that's happened, and it's coming in 1st of April, is it?
1st of April 2016.
Yep.
Straight hit. And just one quick point on that, because it's important to make a point about the date, is that if you'd exchanged contracts prior to the 1st of April 2016, you may be able to avoid that 3% stamp duty charge, but only if you'd exchanged contracts prior to.
All right.
And you should make sure you talk to your solicitor about that. But if you hadn't exchanged contracts prior to the 1st of April, then you're into the new regime.
Okay, fine. So there may be an avenue if you have exchanged prior. So that's something to be looking into if you're completing probably, the first couple of weeks of April as you go on through. I'm guessing that probably doesn't include if you've exchanged on an option. It has to be a formal exchange rather than taking a lease option.
You're absolutely right. It's a formal exchange. A lease option wouldn't count for this purpose.
Okay.
Yeah.
Okay. So, and then going on, obviously you're based in London. You don't see many changes in the London market. I mean, me as an investor, I have this feeling that every cloud has a silver lining, and it's very important to have that feeling when you live in England, because most clouds include rain, and you've got to think of some sort of silver lining to that. The thing we want to think of here is through April, I am very, very sure a lot of sellers will be trying to find out ways of working with this, trying to find out better ways, and it doesn't look like there is one. So if I was you as an investor, I'd actually be out there going and buying on the 2nd of April. And my negotiation tactic would be, who is disappointed? Who has failed to get their deals through prior to this change? And let's not seize that circumstance. I don't want to prey on people's disappointment, but let's give them an opportunity to keep the deal going. At the end of the day, it is only a slight increase in the transaction. So a couple of factors to be thinking of. First thing, remember, stamp duty is only payable by the buyer. So if you are the seller, if you're flipping on your deals, don't worry about it at all. It's their problem to think about. If you're a seller that's worried about his profit margin, can you start selling to first-time buyers? Does it make first-time buyers or homeowners your ideal market? Because they won't have that 3% increase because they're owner-occupiers. They'll be selling one house to buy another one. So they can genuinely tick that box saying it's my only house.
Absolutely,
on
yes.
transaction day. So looking for residential buyers, but I would use this month, April, May. I would use these as some great times to look at opportunities. Now is the time to look out for sellers that want to make a decision, that want to sell. For those of you that want to gain a bit more information on stamp duty, if you go into my favourite friend, Google, on the internet, go into Google and just type in stamp duty, SDLT. So the word stamp, duty, and then the 4 letters SDLT. If you put those into Google, you'll start to get a lot of information coming up, and you'll actually get our HMRC, our government's website. On HMRC, there is a calculator there. Scroll down the page a little bit, stamp duty calculator. All you have to put in is their purchase price, transaction date, so when you're going to be buying the property, and is it residential and commercial, and it will bring up the stamp duty bill that you're going to pay so that you'll be able to work out your negotiations. It's quite a complicated procedure working it out, so I would always go to them to use one of those calculators.
I agree, that's what I use as
it's
well.
all your accountant's going to use or all your solicitor's going to use. So you can help yourself out by doing that calculation. So always calculating that as you're going on forward. And also have in your mind, can I claim that this is a commercial building? This should be a regular conversation with regard to your solicitors. When I say conversation, it can be an email. Don't worry about speaking to solicitors on the phone. They prefer emails because then they know where they stand. But it's about you describing your strategy and what the building is. So if it's a building that already has planning permission, you may be able to say it's got that conversion right, it might have more units in it. If it's a building that's a block of flats, you may be able to work it that way. Some big HMOs, you'll find out they're not residential houses. They are hotels, hostels, or anything like that. That's a commercial building, and this will save you a lot. What you may do is you may whinge about the extra stamp duty, but pay the commercial rates. And there you go, you've just made a spread on your negotiation tactics. There's a few little secrets for you. And I'd like to say thank you very much to Brian. I don't know if there's anything you want to put in there to finish off.
No, I think we've covered it all, Harry.
Yeah.
So just watch out for the new charge, and hopefully that's been a useful exercise for everyone watching.
Great stuff. Thank you very much.